Hey guys, Dan Fitzpatrick here at StockMarketMentor.com on Thursday, March 8th. Today we're going to look at some of the iPad stocks here. We're going to look at 4 of them. Of course, you kind of have to start with Apple, don't you? I had mentioned yesterday that now that the catalyst, so to speak, no, not so to speak, the catalyst for future upside or further upside was behind it. In other words, the iPad release and the details and all that stuff. This is a stock that you maybe kind of want to stay away from, or certainly not to short. But let's just say you don't have to get in a real rush to buy it because it's likely to kind of drift, sideways, maybe sideways to down. Here's the thing. Maybe that's going to happen. But I'm looking at this chart, and like Yogi Berra says, it's like deja vu all over again. We saw this kind of move before. We're seeing it now. Okay, the release was yesterday. The volume was the same, about the same as it had been on the prior 2 days. This was a distribution day. This one was not really technically a distribution day because it had a close higher than the open. Now we're getting another move to the upside. I started buying Apple again today. I'd like to say I bought it a couple days ago, but I'd be lying to you. I'd like to say a lot of things that would be lies. I started buying a little bit today because I'm looking at this and I can't get away from the stinking weekly chart that just shows the stock taking off. At some magical moment in time, the stock's going to come down to earth. But how far out in orbit is it really? Because as I've mentioned before, I think what the market's doing is just simply revaluing the stock. It's assigning a higher multiple to it, which is a byproduct of anticipating greater earnings per share. And so when you've got an anticipation of higher earnings than you had previously anticipated, and a higher growth rate, and those are two totally different things. A higher growth rate than you had really anticipated, just because a lot of analysts have been anticipating kind of a slowdown because, for whatever reason, because Apple's market cap is hitting a certain point. To me, I just really don't see the relevance in that. Only it must be nice as an analyst to be able to write that stuff off, because then all of a sudden it's really easy to do your work. But anyway, so with growth rates, with anticipated growth rate increasing and earnings per share increasing, those estimates, the chart, kind of doesn't matter. I mentioned the other day, well, the chart's starting to matter. Well, I'm going to be consistent in my inconsistency. I'm thinking that maybe the chart's not mattering. So I think the way you deal with this, I'm getting a little long-winded here, but members, you know where I'm going with this. The way to manage this is be a risk manager. Don't be a trader. Manage your risk. Take a shot. Be exposed to Apple. Have some long exposure. Just also know where your risk is. How much money are you willing to lose on a long position? That's your shot. That's the stop that you take. Take a small position and then gradually build it if the stock continues to work. If the stock doesn't continue to work, then don't build your position. Maybe you might hold what you have, but just don't build it. So the bottom line is, I'm looking at Apple and it just continues to confound the bears. Triquant Semiconductor. This is a stock bounced right off the 50-day moving average. Look for more from that. Qualcomm, a little pullback. These guys will be big beneficiaries of the iPad. They're up at the top of the range, but watch them. Here's the weekly chart. The weekly chart shows that this is just starting to drift out to the upside. So there's plenty of upside potential here in Qualcomm. Getting back to the weekly chart. I mean, look where it is. Here, it's right there. Hadn't been up there in how long? There, yearly chart. Not since 2000. So this is a stock that's working. It's working really well. It's kind of one of those stealthy stocks that if you're not careful, you'll lose track of it, and the next thing you know, it's a $75 or an $80 stock, and you're wondering what happened. I think you want to start building a position in Qualcomm. And then the last iPad stock here is Verizon. I think that a lot of folks, particularly based on an article that I read in the New York Times, a newspaper that I don't frequent, but I read an article in the New York Times about how AT&T's talking about how their 4G network is the largest, blah blah blah, and the article says, yeah, but it's not the kind that the iPad uses. Verizon should be a big beneficiary of this. Nice close today, almost up 1%, but you can see intraday the stock was up quite a bit higher and came down. So you probably be able to buy this stock, at least buy it below the upper Bollinger Band. I mean, this is ridiculously high right now from a technical perspective. If you can get it down to the high 38s even or something like that, it's going to be a better deal for you. There's no question about it. But ultimately, this is a stock that moves higher as well. So, okay, guys, that's it for this chart of the day. Members, we're going over the same sectors that we went over yesterday. A lot of those stocks, you'll notice, went up really, really nicely today. So those were 3 good sectors that we checked out. So just get the update on those now. All right, I'll see you next time.